Let's talk about one company, IdeaForge. Their Q1 turned out to be very weak, with the company's margins falling to around 4% from 29% a year ago. The order book also remained muted. To discuss this, we have Ankit Mehta, who's the CEO of the company, joining in. Ankit, hi, welcome to the show. Well, definitely a weak quarter for you all. Just wanted to start with the order book. Your order book, and correct me if I'm wrong, currently stands at around 54 odd crores. And there was no significant order win this quarter either. Why is that? What took place this quarter?
So there are certain large programs that we are tracking, and those large programs I had mentioned in the previous quarter's call as well, that we are tracking an L1 pipeline of about 300 odd crores. We have actually bidded for more contracts where we are the only player under consideration. This is particularly in the international market, and we have a pretty sizable opportunity size on the international market as well. And we are in the process of tracking very closely the closure of those opportunities. So we are essentially in the build phase of the order book, and we should see the results of that in the present and the coming quarter as well, mostly in the coming quarter.
Ankit, good afternoon. Thank you so much for joining in. You've mentioned that you are witnessing a significant opportunity and you are tracking down the closure of those orders. Could you quantify those for them? And part B of my question is, your L1 and 300 crore worth of orders, the figure in the previous quarter was also the same. Now, is that have you bidded for some extra orders, or those L1 orders from the previous quarter have not materialized into a full order for you?
No, so of course, we have closures that have happened in the year from the in the past quarter from the run rate business that we have. The large opportunities, as you know, have a relatively larger, closing time frame. And therefore, a lot of opportunities that we mentioned in the L1 in the previous quarter, they continue to be in the opportunity pipeline, and we have bidded for more. So this 300 has a little bit more coverage on top of this as well. So we are tracking all of those opportunities. So we are quite confident of closing this number to make sure that we are able to deliver on the year's overall growth that we are planning.
Okay, so I'm just going to ask you about your overall growth that you're targeting, especially in terms of the margins. But out of this 300 crores, how much do you expect will convert?
In terms of order book, it will convert. In terms of revenue, we are going to continue to plan for maximum conversion in the year, and that's the process that we are presently on, and we are tracking that very closely.
Okay, so you're expecting majority of the 300 to convert?
Yes, I mean, that's the plan that we have to build.
Okay, now just about the entire fiscal FY25, what is your guidance in terms of revenue and in terms of recovery of margins?
See, I think overall, we do not guide revenue at this point in time, but margin profile should be similar to last year in that broad sense.
Okay.
Right. So you also mentioned in your earnings call, Ankit, that you are seeing a revenue opportunity of around 250 crores in the next 2 to 3 years. Where do you see that coming from? And is there a particular segment? Because considering Q2 is supposed to be the weakest quarter for your company, do you see more opportunities materializing in the second half of FY25?
Yes, in terms of closures, it is expected in that direction. Obviously, a little bit of that delay is also coming from, overall, we also had our elections in the country, and some push out does happen because of that, as you would already expect. In terms of the 250 crore opportunity that we were talking about, this was specifically for the SAR payloads that we have partnered with Galaxy for. And the kind of opportunity we see with those payloads coming into our development and productionization pipeline, we should see opportunity build up just from that one particular payload that we are trying to build with them. And that's an indicative of how, when we do new collaborations and new products, how that adds to our overall revenue opportunity bucket.
So assuming mentioning the fact that Q2 being a weak quarter, very quickly, Ankit, do you expect Q2 to also be similar to how the first quarter has panned out, or do you expect that to be slightly better?
I think Q2, given where we are on the order book, we should expect outcomes which are not going to be significantly better than Q1. But like I said, once the order book fills up, the overall annualized outcome should be very similar or better than, not similar, in fact, better than last year.
Okay. All right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's IdeaForge expecting a possible pickup in terms of numbers coming through. In terms of margins, they expected to be similar to what they were in the last year in FY24. They closed FY24 with 18.6% in terms of margins. They are L1 on 300 crores in terms of orders. We'll take a short break. On the other side, we'll focus on what to expect from a lot of big numbers coming out. Stay tuned.